And welcome everyone to Global Business here on CGTN. I'm Michael Wong in Beijing. The headlines we're tracking for you at this hour. China and Kyrgyzstan are deepening their economic ties ahead of Chinese President Xi Jinping's upcoming state visit to Kyrgyzstan. Foreign companies deepen their China presence as high-tech investment, innovation, and local R&D gain importance. And global policymakers gather at the Jackson Hole Economic Symposium in the U.S. state of Wyoming as markets await Fed Chair Kevin Warsh's signals on the path ahead for U.S. interest rates. All right, let's take a quick look first at the Chinese mainland markets where equities were lower on this Friday. The Shanghai Composite Index dipped about 0.1% on the day, whereas the Shenzhen component fell nearly 0.7%. We'll have more details on the Chinese mainland markets later in the program. Now we'll look at how regional markets performed and how Wall Street closed out overnight. Well, first up, China and Kyrgyzstan are deepening their economic ties ahead of Chinese President Xi Jinping's upcoming state visit to Kyrgyzstan. China's Ministry of Commerce reports that China has remained Kyrgyzstan's largest trading partner, with bilateral trade reaching some $11.7 billion in the first 7 months of this year, with exports of electric vehicles, batteries, and other new 3 products, as well as machinery and electronics, growing rapidly. China is also Kyrgyzstan's largest source of foreign investment, with Chinese investment exceeding $2 billion. Major projects in infrastructure, in energy, mining, agriculture, and green development are all advancing smoothly, bringing tangible benefits to local communities.
Chinese invested projects are playing an important role in strengthening Kyrgyzstan's energy security. Solar power plants, waste-to-energy facilities and wastewater treatment plants are also helping drive the country's green transition. China has also built or upgraded more than a dozen road projects in Kyrgyzstan, significantly improving local transport infrastructure and making travel and freight transportation more convenient.
And cross-border port upgrades are high on the agenda of the upcoming Shanghai Cooperation Organization Summit. At China's westernmost gateway in Irkutsk, the country's road link to Kyrgyzstan and the shortest route into Central Asia, clearance efficiency is improving, especially when it comes to electric vehicles. Our Shang Jianlong is there.
A rapid journey from factory floor to the streets of Central Asia. This is the everyday scene at Irkutsk, the land port that links China to Kyrgyzstan. In what's becoming a routine of efficiency, electric vehicles are cleared for export at a record pace. The model is simple. View a car today, and it rolls out of the country tomorrow.
The customs has adopted a road port plus direct clearance model, combining early declaration and centralized inspection, powered by smart technologies like automated data extraction, plate recognition, and gate verification. This has boosted export cargo efficiency by up to 80%.
The numbers speak for themselves. In the first half of 2026, Irkutsk processed nearly 10,000 new energy vehicles, a modest number compared to the mega hub of Horgos. The size isn't the whole story. The port is not the biggest, but it's the closest. In trade, proximity is power. And turning that power into speed takes constant refinement of process on the ground.
We run 24/7 freight clearance, streamline inspections, and offer multiple facilitation measures. We focus on business needs, improve emergency response, and boost port efficiency to support local development.
And it's not just about the paperwork. On the ground, an army of drivers has become the crucial link between the two nations. Known as ferrymen, These drivers personally transport the cars across the border. This human touch ensures flexibility in a high-volume trade.
I've been driving the China-Kyrgyzstan route for years. Clearance is faster now, inspections are simpler, more trips, more earnings.
A few meters behind me lies the border that connects China and Kyrgyzstan, and beyond it, the vast market of Central Asia. Right now, this crossing has become a key corridor for westbound trade, with Chinese EVs among the fast-growing cargo categories. Clear customs in one day and reach Bishkek in one day at best. And this is the new speed of trade here, and the speed is accelerating. Kyrgyzstan is just one piece of a much larger picture. Across Xinjiang, a network of border ports is becoming a superhighway for Chinese new energy vehicles. The gateways are transforming Xinjiang from China's western frontier into Central Asia's front door for green mobility. The Asian Silk Road carried silk and spices. Today, it carries silence, speed, and sustainable power. And this is only the beginning. Shang Tianlong, CGTN, Kyrgyzstan, Xinjiang.
And for more on China-Kyrgyzstan economic relations, I want to bring in Dr. Zhou Mi, a senior research fellow at the Chinese Academy of International Trade and Economic Cooperation. Dr. Zhou, welcome to the program as always. So bilateral trade ties between China and Kyrgyzstan are deepening with faster customs clearance. We also see, of course, more Chinese new energy vehicles entering into Kyrgyzstan and Central Asia broadly. What tangible benefits are these bringing to businesses in the region?
Well, in my understanding, I think that the trade facilitation is quite important for Kyrgyzstan to have a better exchange of the resources with the neighboring markets, including China. I think that China is definitely one of a major partner of the Kyrgyzstan and also a very important investment source, for this country. So the trade and also the renewable energy vehicles are providing Kyrgyzstan with more abilities to fulfill its target to transfer from a resources-driven economy into a renewable resources-driven economy. I think that is definitely one very important target for them to meet. The bilateral trade are helping the both countries to improve their relations. I mean, that is really important for us to have a better life.
Yeah. Well, Dr. Zhou, as China expands trade links westward, which sectors offer, you think, the greatest opportunities for Chinese and Kyrgyz businesses?
Well, there are quite a lot. I would say that including the husbandries, the stock farmings, this is their advantages and also some of the resources that's coming from Kyrgyzstan. But I think that trade between these two countries can improve their abilities to not just trying to export the raw materials to China, but also have a better processed raw materials to China. I think that is important. And another one, I think that many people coming from the both sides to the other countries, which will bring many new talents and also some of this knowledge about the development in a better way. The infrastructure is another important thing. I think that, when we're able to provide the people with more abilities and choices, the country will have a more diversified and more resilient development for the economy.
And beyond trade, where do you see the greatest potential for deeper economic cooperation between China and Kyrgyzstan?
Well, trade is important, as we know that trade between China and Central Asia has a very large increase for the first half of the year. But I think that trade also brings us more information and knowledge about what can we do to improve the integration. And for Kyrgyzstan and other Middle Asian countries, I think that in the past, they want to have a better connections with Western countries through the maritime transportation, but now they are having better abilities to be integrated with China's market. So we can do more to improve the integrations by the trade, investment, and infrastructure cooperation, and also we can help them to make it a little bit more integrated in their countries themselves, from the north to the south. So they have a better connections with the state grids and also the rail connections. That is important for them to have a better opportunities in the coming future.
Okay, Dr. Zhou, many thanks for your thoughts as always. That was Dr. Zhou Mi, Senior Research Fellow at the Chinese Academy of International Trade and Economic Cooperation. And up next here on Global Business. Foreign companies deepen their China presence as high-tech investment, innovation, and local R&D gain importance.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business. Only on CGTN.
All right, let's take a look now at how equity markets here on the Chinese mainland, over in Hong Kong and Tokyo wrapped up the week. Tim Pope is standing by for us in Shanghai. Tim, so what should we be watching in the Chinese mainland markets at the end of this week?
Hi there, Michael. Yes, the Chinese mainland markets ended the week a bit mixed today. The Shanghai Composite slipped 0.1%. The Shenzhen component was down 0.7%. The Chinex board lost 1.4%. But the Shanghai Composite did still manage to gain about 1.2% over the course of the week. I think we can now describe the volatility that we've been seeing in growth stocks as something of a trend in the mainland markets, these very violent rotations in and out of AI and adjacent sectors. We started the week with a rout, with some of the biggest AI hardware names falling, 7, 8, even 10% in that single session. Then Nvidia's very strong earnings in the US helped trigger a sharp rebound on Thursday, particularly for semiconductor, optical modules and other AI infrastructure stocks. And then today, some of those sectors came under a bit of pressure again. So investors are still, they still clearly believe in the long-term AI growth story, but they are also pretty quick to take profits when valuations start looking stretched. Interestingly, the industrial profit data this week told quite a similar story. Overall, industrial profits were up strongly in the first 7 months of the year, but a huge amount of that strength came from high-tech manufacturing. Electronics profits were up more than 100%, while sectors like auto manufacturing were much weaker. So the economic data is reflecting some of the same imbalance that we're seeing in the stock market. One trade, though, which has been much more consistent is agriculture. We've seen agriculture and food security stocks remain strong again today, extending gains that we saw at the end of last week. That trade has now lasted long enough, I think, that it looks less like a one-day defensive move and more like a theme that investors are actively sticking with, Michael.
And Tim, what about the other regional markets? So Nvidia's results, of course, were felt around the world this week, but what else has been moving the markets?
Yeah, Hong Kong's had a fairly difficult week. The Hang Seng ended today pretty much flat, but that still leaves it down roughly 1% for the week as a whole. The biggest damage, though, was done on Monday when Alibaba made that surprise $10.2 billion share placement, and that sent the stock sharply lower and dragged heavily on the broader technology sector. As you said, the Nvidia stocks did sort of promote a bit of a recovery midweek, but it really wasn't enough to undo Monday's losses, I suppose. There could still be a fairly important batch of Chinese corporate news coming up in just a few minutes, really. We're waiting for earnings from BYD and several of China's biggest banks, including ICBC, China Construction Bank, Agricultural Bank of China, and Bank of China, all the big ones. For the banks, the big question is whether net interest margins are finally stabilising after being squeezed by the lower lending rates. And for BYD, we're going to be watching margins and pricing particularly closely, given the government's push against excessive competition in the EV sector. Those numbers, though, they're going to be more important for Monday's opening rather than today's close. In Tokyo, we saw the Nikkei finish 0.4% higher today. That was helped a bit by a rebound in tech stocks after Nvidia, but investors are also waiting for Federal Reserve Chair Kevin Warsh's speech in the US later today. That could move American bond yields and the dollar-yen exchange rate. The Bank of Japan rate story also remains unresolved. Deputy Governor Ryozo Himeno said on Thursday that interest rates needed to be adjusted in a timely way as inflation risks increase. But he did stop short of signalling that a September rate hike is definitely on. Tokyo inflation data today gave the hawks a little more ammunition. Underlying inflation is around the BOJ's 2% target. So Tokyo still has this tension between two trades. Really strong AI earnings supporting some of the Nikkei's biggest tech stocks. And then on the other side, expectations of higher Japanese interest rates and elevated bond yields working in the opposite direction by putting pressure on growth valuations and potentially strengthening the yen, Michael.
Okay, Tim, many thanks for that update as always. Tim Pope for us in Shanghai. Well, the 2026 China International Fair for Trade and Services will be held here in Beijing in September. Officials said at a press conference on Friday that the focus will be on expanding opening up, deepening cooperation, and driving innovation. The fair will showcase new technologies and achievements in fields including information and communications, financial technologies, and smart healthcare, with breakthroughs expected across multiple areas.
中国将扩大开放作为服务贸易发展的重要。
China sees greater opening up as an important driver of trade and services and is accelerating the development of national demonstration zones for innovative services trade. This year, a China Services exhibition area will be set up at the heart of the thematic exhibition, showcasing innovative achievements from across the country. The event will also provide a platform for countries to discuss and promote the liberalization and facilitation of trade and services.
And foreign companies are expanding their footprint across China. Over 37,000 new foreign invested firms were set up in the first 7 months of this year. That is up 4.4% year on year. Foreign direct investment in actual use reached 438 billion yuan, down 6% compared to a year ago. Now, despite that overall drop, high-tech investment surged over 32% and accounted for more than 40% of total foreign direct investment. That's up 12 percentage points from a year ago. R&D and science and technology commercialization services led the gains. A recent EU Chamber survey shows that 94% of companies still see China as a key sourcing hub for their supply chains.
More than 500 European companies are surveyed this year. 70% profitability, 48% innovation. I summarize in 3 words: market, innovation, and supply chain. China is no longer simply a market where European companies come to sell. They come to sell, to produce, to innovate. And increasingly they innovate in China to compete globally.
China's AI industry is at the forefront globally. The openness and collaboration of China's AI industry is fostering a positive global cycle in AI innovation. These advantages are tangibly accelerating our local R&D in China, enable us to complete our strategic transformation.
The Chinese market is crucial to us. We have full confidence in the sustained, long-term growth and prosperity of the Chinese economy.
Meanwhile, global restaurant brands are doubling down on their investments here in China, rolling out new stores and new expansion plans. American fast food chain Five Guys opened its first 2 Beijing outlets on August the 3rd, marking its first city expansion since entering the Chinese mainland market back in 2021. Meanwhile, U.S. fried chicken brand Popeyes now operates over 90 stores nationwide, with more than 80 in East China. It also plans to partner with Taobao Flash Shopping to launch at least 20 satellite locations. Church's Texas Chicken and Wendy's have both signed franchise agreements this year to re-enter the market. Wendy's is aiming for 1,000 stores over the next decade, and Cinnabon is also stepping up its presence, having opened an R&D center and training base over in Suzhou, followed by its first 2 Chinese mainland stores over in Shanghai. Well, the German Chamber of Commerce in China has released its latest labor market and salary report, which indicates that German companies operating in China anticipate an average salary increase of nearly 3.2% this year. Our Yu Bo-Kun spoke with Oliver Ohms, Executive Director and Board Member of the German Chamber of Commerce in China, North China, to discuss the labor market outlook and the evolving innovation landscape here in China, particularly the growing trend of knowledge and technology transfer from Chinese branches back to German headquarters.
So if you are a CEO, what kind of person do you want to hire?
It's a good question. Thankfully, we have a very loyal employer-employee relationship across the board here in China, we see that obviously the emerging topics, let's put it this way, AI, automation, robotics, are very high in demand, and to some extent this is also true for us. We are not a manufacturing company, but the topic of AI also plays an important role in our daily work. So even though I'm kind from the older generation, I see that the new talent that we are looking into, they have, let's say, admirable strengths and competencies in these areas.
I also want to touch on another report which you've published recently, indicated that over 60% of the German companies in China see that Chinese company will become a leader in innovation in their sectors. So can you elaborate on that?
We have been observing this trend for the last decade already. The numbers were starting at a very low margin, and there has been quite a sharp, if not exponential increase in the last 4 to 5 years. Also here, sectoral differences, especially our automotive members tell us that their Chinese peers or competitors are already, let's say, leading technological innovation. This is very impressive. Therefore, also, let's say, the nature of the partnership between Chinese and German companies has been changing quite a bit in those years.
So how will that play out in the future? You see the relationship between Chinese companies and German companies are changing. What's your outlook?
It does. Well, in many sectors, no one is waiting for international companies here in China. No one is waiting for international companies to provide the latest technology, be it products or services. In many cases, we just see the reverse flow of innovation and knowledge. Chinese companies providing knowledge to the world. This is also reflected in the study that you mentioned, where a third of our members tell us already that there's, let's say, reverse knowledge transfer from their Chinese operations back home to headquarters in Germany. Also, this number has been increasing quite sharply recently. Therefore, when we talk about technologies, especially, let's say, in automation, machinery, but also automotive, very often Chinese companies are meeting their German peers at eye level.
I also want to touch on AI, because you mentioned earlier. So how will AI changing the way that German company hiring Chinese talent here?
Well, interestingly, our study reveals that it's not yet such a dominating factor. At least we do not see from the figures that jobs are replaced by artificial intelligence or further, let's say, layers of automation. Of course, the Germans are competing with very attractive Chinese employers. Therefore, we expect this to be a much more dominating factor in the next maybe 24 months.
Right, so what continues to draw foreign investment into China, and how is the country's evolving innovation landscape reshaping its appeal as an investment destination? For more on that, I want to bring in Wang Yaojing, Associate Professor of Economics at Peking University. Professor Wang, always great to have you on the program. So, first of all, we are indeed seeing foreign brands continue to expand in China, while investment in high-tech industries in particular is also growing. What continues, in your view, to make China an attractive market for foreign companies?
Well, thank you for having me, Michael. First, China remains one of the largest consumer markets in the world, but the opportunity is no longer limited to Beijing or Shanghai. Rising income and changing lifestyle are creating this demand for better products and services across many smaller cities as well. So I recently read that Starbucks has announced that although it has around 8,000 stores in China now, but it plans to expand to as many as 20,000. So that tells us the company still sees significant room for growth, especially outside the largest cities. And second, China offers an unusually complete industrial ecosystem. Companies can connect suppliers, manufacturers, logistic providers and customers within the same market. This shortens development cycles and reduces production cost. And third, China's economic transformation is creating new opportunities. As you mentioned, the high-tech industry is attracting especially a lot of foreign investment. So we're seeing digitalization, green development, and industrial upgrading are generating demand for advanced technologies and specialized services as well.
Yeah, let me stick with technology for a second, Professor, because China is attractive, of course, to many international companies because of its market size and manufacturing base. That's important. But to what extent are innovation, technology, skilled talent increasingly becoming important reasons to invest in China?
Well, indeed, in the past, China's main advantages were often described as market size, relatively low production cost, and manufacturing capacity. But today, the investment logic is changing. So China has a large pool of engineers, researchers, digital professionals, and highly skilled industrial workers. This talent base allows companies not only to manufacture products, but also to design, test, and prove them locally. And China's highly competitive market is another important advantage. Consumers adopt new technologies very, very quickly, while domestic firms innovate at a greater speed. So foreign companies operating in this environment receive rapid market feedback and face constant pressure to improve. For example, China's new energy vehicle is one of the fast-growing and competitive industry. And the automobile giant Volkswagen builds its technology center in Hefei, which allows its largest R&D facility outside of Germany to bring this software development, vehicle testing, and local suppliers together. And Volkswagen says it can actually develop new intelligent vehicles much, much faster.
Yeah. Well, Professor, we are seeing more foreign companies, of course, conducting their R&D in China, like you alluded to, in many cases applying these locally developed technologies and know-how onto their global operations. So then give us some more details in terms of to what extent is China evolving from just a major market to a major node when it comes to global innovation networks?
Well, the key change is, of course, China's industrial upgrade, and also following that, the multinational companies are giving their Chinese operations more sophisticated functions, and local teams are increasingly involved in the product science, engineers, and software development. And also, in some cases, products are first developed for Chinese consumers and then introduced into other markets. So China offers this distinctive innovation environment because research, manufacturing, and commercialization can occur very closely together. For example, an idea developed in an R&D center can be tested with suppliers, manufactured at scale, and then refined through customer feedback, all within a very relatively shorter cycle. And China's strengths are therefore not limited to scientific discovery. They also include engineering, application, and also commercialization as well. And this does not mean that China is replacing other innovation centers, having said that. So modern innovation is increasingly networked rather than just concentrated in one country. So China is becoming one of the several major global nodes connected to research, capital, and markets. So the long-term opportunity, I think, is moving from made in China or sold in China towards created with China. And we expect to see Beijing to push for more continued openness, strong intellectual property protection, and predictable market rules, which will be essential to deepen that role.
Okay, we are going to leave it there. Always appreciate your insights. That's Professor Wang Yaojing, an Associate Professor of Economics at Peking University. And still to come here on Global Business. Global policymakers gather at the Jackson Hole Economic Symposium in the U.S. state of Wyoming as markets await Fed Chair Kevin Warsh's signals on the path ahead for U.S. interest rates.
A vast land of 1.4 billion people. The world's second largest economy. Home to stories of the unexpected, the unimaginable, the breathtaking. Stories that touch the soul. Feel the speed, the passion. Enjoy spectacular natural and cultural landscapes. Feel the thrill of cutting-edge innovations. Discovering China. Global Biz. China Travel. We present a China never seen before. 24/7 at your fingertips.
Well, Canadian Prime Minister Mark Carney says Lake Ontario will continue to be known as Lake Ontario. That's after U.S. President Donald Trump renamed it Lake America. Carney says the name is more than 400 years old and predates both Canada and the United States. The name comes from North America's indigenous Wendat people's word of Antari-iyo, meaning the lake is beautiful, the lake is big. Trump gave an executive order to rename Lake Ontario Lake America on Thursday amid growing trade tensions with Canada. The two sides failed to reach a trade deal on August 21st, and Washington imposed a 50% tariff on around $20 billion worth of Canadian goods the next day. Trump's renaming of the lake affects only U.S. federal usage and does not govern what Canada or the rest of the world call the lake. Here are some reactions of people spending their day by the lake.
I don't think he has any right to comment on the name of a lake that is not within his country's borders. It's an interesting fantasy, I suppose, but yeah, I don't see why he would be commenting on that when it's nothing to do with him.
It's ridiculous. I'm behind Carney all the way. As individuals in Alberta, there are lots of us who are on Team Canada with Carney to stand up to Trump in any possible way. And there is no way that that is Lake America. It's Lake Ontario.
You know, I'm not sure I'm a big fan of that. I think this has been Lake Ontario. We share the lake with Canada, and there's no reason to change it.
Meanwhile, U.S. President Donald Trump has threatened to double tariffs on imported Canadian automobiles and auto parts to 50% starting next year. The continuing trade conflict has left businesses on both sides deeply concerned. Our Dan Williams has more from Windsor in Canada.
A welder works on a piece of steel. This is Yarn Engineering, a tool and die company based just outside of Windsor, Canada. These parts will eventually form a specialized tool that will manufacture products.
You'll have multiple machines making multiple parts, and eventually all these parts get assembled into a mold.
In the past, a big part of this business was focused on the nearby auto industries in both Michigan in the US and Ontario in Canada. But against a backdrop of tariffs and retaliatory tariffs, especially on steel and aluminum, that work decreased significantly.
The tariffs have definitely made a difference. So what it's really doing is the net effect is it's driving the costs up in the United States, because the Canadians do not pay the tariffs, the Americans do.
Louis Yarn hopes that the two countries, along with Mexico, can resolve their differences and put a spotlight back on North American manufacturing. But he says any plan needs to include all three countries, and it will take time and investment.
A lot of the manufacturing and tooling companies in the United States and Canada, they're gone now. They've disappeared, the skill sets have disappeared. What we really need to do is concentrate on doing real steps, making real movements to bring manufacturing back to North America in a real way. And what you have to be realistic about, it's not going to come back overnight. It's going to take 5, 10, 20 years.
The bruising trade war between the US and Canada is expected to cause economic stress on both sides of the border. But businesses, indeed entire industries, fear more economic stress could soon follow, with the potential risk of further escalation. It comes as US President Donald Trump has threatened to double tariffs on Canadian automobiles and auto parts to 50% at the start of next year. That, Yarn says, would have huge ramifications on the North American auto industry.
Any tariff above zero, they don't exist anymore. Right now, for the last year and a half, 2 years, they've been absorbing a lot of these tariffs. Well, they can't do that indefinitely because they'll be out of business. They're not going to introduce a full line of new vehicles if they don't know the net cost, or if they think the net costs put them out of business.
Since the tariff war began, businesses like this one continue to pivot amid growing uncertainty. But long-term, the hope for many here is that both countries can find a way forward together. Dan Williams, CGTN, Windsor, Canada.
Meanwhile, new data shows the U.S. economy is sending mixed signals. Non-farm payrolls unexpectedly declined in July, pointing to a cooling labor market. Now, at the same time, the U.S. Commerce Department reported that the Personal Consumption Expenditure Price Index, the Fed's preferred inflation gauge, has now surpassed the 2% target for 65 straight months. that persistent price pressure is forcing the Federal Reserve to rethink its next policy move. Our Mitch McCann has more.
Last week, 203,000 Americans applied for unemployment benefits. That's down from 206,000 the week before, and it's also below the 208,000 target. So less Americans than expected are filing for unemployment benefits. Now, while that is positive news, fewer people are signing up for unemployment benefits, it does give the Federal Reserve more of a reason to hike rates at a time of inflation. That is because the risk with hiking rates, and the Fed will have been wary of this, is that it could be bad for job growth and job stimulation. But as we've just highlighted, job growth is becoming less of a concern, meaning tackling inflation really is still the main priority. Now, this comes as Kevin Warsh is set to give a highly anticipated speech at the Jackson Hole Symposium in Wyoming tomorrow. All eyes are going to be watching to see what he has to say about rates and whether or not he sees more room for a rate hike in September. Now, some interesting numbers on this I've been reading this morning. The Federal Reserve's inflation target, as we know, is 2%. Inflation right now is about 3.7%, and that means that the Fed has missed inflation targets for 65 months straight. Now, Warsh has been very public about the fact that the Fed needs to be less public, actually. It needs to spend less time telling the world what might happen at upcoming meetings and more time watching market reaction to decisions. So it remains unclear how much policy direction he's going to give tomorrow, but you can bet that the market's going to be watching extremely closely what he has to say. He may address what we've just talked about, those jobs numbers, but also inflation is the key priority at this point. So we're going to be watching to see what Kevin Warsh says and whether he hints whether or not there's going to be a possible rate hike, actually. It's only a few months ago we were talking about rate cuts, a rate hike at the next meeting in September.
So indeed, the world's leading economic policymakers are gathering in the U.S. state of Wyoming for the annual Jackson Hole Economic Symposium. It is a chance for new U.S. Federal Reserve Chairman Kevin Warsh to lay out his economic vision of the future and address, among other things, the always tricky question of interest rates. CGTN's Hendrik Sabrandi has a preview from Denver.
The theme of this year's three-day conference is financial innovation, the way technology is rewriting the rules of money and global banking. But all eyes will be on new U.S. Fed Chairman Kevin Warsh on Friday and what he says about the state of the U.S. economy, inflation, and the prospect of interest rate increases in the near future. In many ways, the U.S. economy continues to hum along. GDP growth continues, though at a slowed pace. Unemployment rates are relatively low. The stock market continues to be fueled by AI investment. But there are storm clouds gathering. The inflation rate for July was 3.4%. It's been above the central bank's target of 2% for 5 years now. Long-term U.S. borrowing costs have surged to nearly two-decade highs. That's prompted the U.S. Treasury Secretary to try to bring bond yields back down, with not a lot of success so far. The challenge for Chairman Warsh is to lay out his view of the current economic risks and his view of the Fed's role in markets. Just last month, the Federal Reserve left its key interest rate unchanged, despite inflation and the higher energy prices caused by the Iran war.
Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it.
Warsh is known to prefer to focus on the big economic picture. He's convened 5 task forces to look into a range of issues, including the optimal size of the Fed's balance sheet. But economists and investors prefer that he focus on the here and now. Will the Fed be aggressive in addressing affordability and bringing down inflation by raising interest rates? He hasn't been very clear on those points in the first few months on the job. We may know more about his thinking on Friday. Hendrik Sabrandi, CGTN, Denver.
And that's going to wrap up this edition of Global Business here on CGTN. I'm Michael Wong here in Beijing. Coming up next here on CGTN is The World Today with Wang Mengmeng. Stay tuned.